Okay, let's continue on with minion mowing. And here is our transactions and our chart of accounts. We've already analyzed the regular transactions. We will need a couple of pieces of information as we journalize, which is the next step. But mostly we'll be working straight from our analyzing sheets into the journal entries. So our analyzing sheets have all the accounts that we need to debit and credit. It has our date and it has our amount listed on there. If you used T accounts to analyze, that's fine too. You will need the date, the amount, what you're debiting, and what you're crediting. You'll also need journal paper. We're going to journalize these into the general journal. There are other journals, but we'll use the general journal. You can do this on accounting paper by hand, or you can type it in manually like we're going to do here on this Word document, general journal. You could do things on software such as QuickBooks or Sage 50, and that ends up looking just a little bit different. Okay, so the first transaction, we said we're going to debit cash and credit capital, and it's May 1st for $5,000. Okay, so step one is to put our date in, May the 1st. Now, on the first line, if you're doing things manually, the first line of each page has the month on it. The rest of the transactions only have the actual date. You have to remember that debits come first, credits come second. Okay, so in this case, cash, we said we were going to debit cash for $5,000. We also need either a .00 typed in or a dash. Okay, our credit is second and is indented. Now, if you're using QuickBooks or Sage 50 or even Cengage, something that is a software thing, then oftentimes they'll put the credit right underneath the debit. But if you're typing it manually on here, or you're using accounting paper and a pen, then you need to indent for the credit, which was MM, capital, and that was a credit for $5,000. Okay, then we have our explanation. Goes on underneath that. You can come way back to the left again, or you can go even further to the right. We're invested in new business. Okay. All right, our second transaction, okay, is we're debiting rent expense, crediting cash on May the 2nd for $200. Okay, so our date is the 2nd. Debits go first. In this case, rent expense is the debit. 5, cash is the credit, so it's second and indented. That's for $200. And our explanation, rent for May. Okay, our next transaction, third one, we're going to debit equipment, credit, accounts payable, May the 5th for $1,200. Now, whenever we have accounts payable or accounts receivable, and they're being debited or credited, it doesn't matter which. If we're using that account, we also have to say who is the vendor if it's accounts payable or the customer if it's accounts receivable. So here's one of those times when I do have to look that up on my transactions. The vendor was XYZ company. So accounts payable, XYZ company. Okay, now whenever we have a vendor or a customer listed, accounts payable or accounts receivable, that has to be posted immediately. Right now, I have been just journalizing, and then I was going to go ahead and post. But when you have an accounts payable subsidiary ledger or an accounts receivable subsidiary ledger, you're going to need to post that part, the XYZ part, right away. So here's my ledger. There's the general ledger, and I have an accounts receivable ledger and an accounts payable ledger. So this is accounts payable, so I put in the date. That was May the 5th. We leave the item column blank, okay, and XYZ is being credited for $1,200. We owe out $1,200 to XYZ company. Their new running total balance is $1,200. Okay, where did this information come from? It came from the General Journal, page 1. Then we go back. Here, and we would put a check mark for XYZ, but you can just put an asterisk if you want to show that you did post it to XYZ. We haven't posted it to accounts payable in the general ledger yet, but we did post it to XYZ. Okay, I'm going to go down and put our explanation. Bought equipment on account. Normally, you would have an invoice number, and you would have put that invoice number down on the explanation. Okay. Oops. Okay, so that was the third transaction. Now we have the fourth transaction. We're debiting mowing supplies, crediting cash on the 8th for $150. Debiting mowing supplies, crediting cash, $150. Okay, we purchase supplies. Okay, go on to our next one. Okay, we're debiting accounts receivable, crediting mowing fees earned on the 10th for $860. Now, once again, we have an accounts receivable, so I have to know who is the customer. Okay, so I look up here. And that was Minion Mansion Apartments. Okay, we sold mowing services on account. Now, before I go on, once again, when you have accounts receivable, you got an accounts receivable subsidiary ledger, we need to post that Minion Mansion Apartments right away. So here's my accounts receivable ledger. That was on the 10th. Item is left blank. Okay. That was a debit, accounts receivable, and the customer is being debited. And our new running total balance that the apartments owes us is $860. Where did this come from? GJ, page 1. And we go back to post reference of the journal, put our little asterisk to show yes, we did post it to Minion Mansion Apartments, even though we haven't posted it to accounts receivable yet in the general ledger. Okay, next one, we're debiting phone expense, crediting cash on the 15th for $80. Debiting telephone expense, $80. Crediting cash. We have our explanation. Paid phone bill for May. Skip a line. Skip a line between each transaction. Okay. Next one, we're debiting cash, crediting mowing fees earned on the 18th for $620. Debiting cash, crediting mowing fees earned. Sold mowing services for cash. Okay, we go on to the next one. We're debiting accounts payable, crediting cash on the 20th for $100. Okay, once again, we have to know who is the vendor. Well, it's still XYZ. Where we made a payment on that equipment. Paid out cash. Okay, again, we would probably have an invoice number. What invoice are we paying on? Okay, but here we only have the one. Okay, so again, every time you have a